It's time to open up our grain markets. I'm Marlon Bowling with you, and let's dive right into it here. Let's start with the corn, and on the corn futures right now, we begin with that March contract. Well, it is trading just a quarter of a cent higher right now at 384.5. Now, it was a little bit firmer here when we actually open, and we're starting to slide a bit. We have the May contract just one tick higher now at 391.5. The new crop December actually down a half cent at $4.25. Soybeans are interesting here this morning. We have the January soybeans, which are in delivery, down 3.5 cents. We have the March, the active March contract, down 3 3/4 now at 943.5. That's way off its earlier high from overnight by about 11 cents here. We'll find out about that here in a second. Looking at how we're opening in the wheat trade in Chicago, we have that March contract now 7 3/4 higher at 560.5. So a big move higher in the Chicago wheat market here to kick things off this morning. What about Kansas City wheat? On the March, we're now 7.5 higher there at 487.5. And on the Minneapolis March contract here so far this morning, right now it's showing a trade 5 1/4 cents higher. It's at 5.53 per bushel. So I want to bring in Brian Hoops. He's with Midwest Market Solutions. He's in Springfield, Missouri. Interesting open here. Let's talk about this. We have soybeans weak in the knees. We have the wheat market starting to take off, and they're going opposite directions here. That's in advance of a big major set of reports coming out tomorrow. You would think things would be quieting down ahead of that.
Yeah, we are seeing quite a bit of positioning ahead of that report. I thought we'd see a little bit more short covering in soybeans, and it kind of looked that way in the overnight trends. You know, you look at the average trade guess for the report tomorrow, and most of the trade estimates are looking for smaller corn, smaller soybean crops, ending stocks to decline slightly for both of those markets. And I thought that would be enough to give us some short covering going into the report. Kind of the risk would be for the traders that are short, they'd want to take some profits off the table. But our quarterly stocks number, if you look at that one closely, it's going to be down significantly from last year for soybeans, but it will be the second largest in the last 8 years. So certainly a negative factor for soybeans. And I think this wheat market is really trying to factor in a reduction in winter wheat seedings, and that will be out tomorrow. The USDA, I think this is interesting that 28 out of the last 30 years, the USDA has come in under the average trade guess for winter wheat seeding. So there's ideas that we'll see a somewhat friendly report tomorrow from the government. But soft red wheat acres, they actually could increase from last year. I think there's a tight enough stocks that prices moved higher in the in Chicago market last year. That may have enticed a little bit more acres, whereas we expect acres in the hard red wheat belt where Kansas City is more traded. They will be down in tomorrow's report.
All right. We do have the early estimates of the survey that was done of analysts around the country here by the Wall Street Journal for the quarterly stocks numbers. And for the corn, on that quarterly estimate, we're looking at corn at 11.42 billion bushels. For the quarterly soybean stocks, we're looking at 3.18 billion bushels. And on the wheat, the average trade guess is hovering around 1.92 billion bushels. So that's how the trade is expecting the numbers to come out here tomorrow. So we'll come back here in a moment and we'll open up our livestock trade, see how it's going to fare here on a Thursday with Brian Hoops when we come back. Let's go ahead and open up our livestock trade. We begin with our live cattle market in Chicago. On the futures, we have a higher tone across the board. So we have the nearby February contract now quoted right at $127. It's $127 per hundredweight. That is up 65 cents from our close yesterday. And we have the April contract now at $127.40. That is up 35 cents from yesterday. Pretty consistent gains between April and August of next year. They're all about 35 cents higher or so. Let's look at our feeder cattle market here to get things rolling. On a Thursday, we are higher here as well. So the nearby January contract now up 38 cents. We're at $147.05. Well, check that and make it 23 higher now. The March contract 40 higher at $146.93. We are higher with moderate gains in the feeders to start things out today. And then you get to the lean hog market, and they are going the other direction today. We have the February now down 70 at $68.33, and we had a high of $69 early on. We have the April contract 45 lower at $75.30 right now, so a lower tone here led by the nearby contracts with the most downward pressure. We bring in Brian Hoops again of Midwest Market Solutions. So what do you see driving this cattle market here to the upside today?
Well, I found it interesting, Marlon, that there was a packer starting to bid 122 for this week's inventory. And last week, this same packer was bidding 121. And they kind of started the rally in the cash market last week with those bids. And so they're actually bidding a little bit higher this week. And asking prices are 127. At some point, we'll eventually see that cash trade developing. The February futures already have a pretty decent premium built into it, so we may not advance a lot more unless that cash starts to come in, in the 126 range. But a steady to a slightly higher cash market has been anticipated by the trade this week.
I saw something interesting this morning. We get our daily update on what the U.S. pork packer margins are from day to day, and we got a new update here this morning. These are, of course, are based on calculations done by the Wall Street Journal, and on the pork packer margin index this morning, we had the price coming in from yesterday on January 8th at $39.09. This is on a per head basis. $39.09. That's down from $42.25 the day before. And January 6th, it was at $46. So it's a fairly steep decline. Is that going to be reflected in our cash trade today?
Yeah, you'll see that the cash market's probably starting to back up a little bit, this week. But by next week, with that cold spell moving in through the Midwest, that could increase the cash markets for the hogs once again. It's going to affect the hogs when they're shipped out, and so I think you'll see a little premium put into the cash markets by the packers.
Okay. Well, thanks for explaining that. I appreciate it. Brian Hoops of Midwest Market Solutions to get us started here on our trading session on a Thursday. And Janet, we're off to the races. We'll see how we are in a half an hour.
All right. Sounds like a plan. Thanks, Marlon.